You're listening to the Accenture Insurance Influencers podcast.
You really do want to go in with a mindset of, okay, I'm not going to be necessarily hitting the slots at all. I'm not going to be drinking too much. This is going to be work, but I'm going to get more done in 2.5 days than I'd be able to get done otherwise in 2.5 weeks.
Welcome back to Season 2 of the podcast. I'm Igrani Yu, and today I'm speaking with Caribou Honig, the co-founder and chairman of InsureTech Connect and chairman of HR Transform. I'm really looking forward to our conversation, Caribou. Shall we get started?
I'd be delighted.
You spent 10 years at Capital One, an organization known for its data-driven focus. And from there, you co-founded QED Investors, a venture capital firm also focused on data and specifically data-driven companies. Given that background, I'm curious, what are you seeing in the insurance industry right now?
I think that there's a bunch of interesting trends that some I get more obsessed with than others. I like parametric insurance quite a lot. It's still ramping up, and it may be my great white whale that never really takes off to its fullest the way I think it should. But parametric insurance, that's sort of the payouts are triggered by some objective third-party data feed for some sort of incident. I like that a lot. I've really been obsessed lately with APIs and the APIification of the insurance stack. I think that's got big implications for insurance, and whether insurtech or incumbents. I've recently started thinking about the entire technology-driven change in insurance as a question of cost curves, and I fear that starts to get really nerdy, even more than my usual nerdy level. But I'm just sort of starting to think about, well, everything out there from a technology perspective, from the information age, whether it's processing power, whether it's more applied things like cloud storage, or the cost of a given amount of functionality of a smartphone, getting a satellite image, the cost of that's going down, the cost of sequencing the genome is falling dramatically. A lot of cost of labor can start to get replaced by software or machine intelligence. I think a perspective of looking at the technology trends impacting insurance as a set of cost curves is maybe an interesting lens to look at it. And
I understand you have collected a library of APIs. Is that right?
I am in process. So I've got a side project. I get these harebrained ideas, and I've got to go try to pursue them as a side project called insurtech.io. And basically, the idea is, it seems like there should be a catalog of all the APIs related to insurance, collected some in one location, so that if you are creating an API and you want to let the world know about it, you just let the world know about it through insurtech.io. If you're trying to build something and you want to find what APIs already exist that you can just tap into so you don't have to rebuild it, you just go to one place, insurtech.io, and you find it. And strangely, it didn't seem to exist. Seemed like it would be useful. And so been in process with a couple of folks I know to try to create it. So right now we're in a rough beta, and but over the course of the next couple months, over the summer here, I'm hoping that it will become really quite functional and start to be useful for people.
I know that the past 2 years, at least at InsureTech Connect, you've opened up your keynote by looking at some of the big industry trends. And last year, you talked about this Cambrian Explosion in insurtechs. Can you talk a little bit about that?
Yeah, I'm always happy to. Now, I'll start for folks who aren't aspiring biologists. Just a reminder that the Cambrian Explosion was like 550 million years ago. And it's really when complex organisms started to emerge. Right? It sort of went from lots and lots and lots of single-celled animals to, oh, look, there's complex trilobites swimming all around. Isn't that interesting? But really, many different forms of life were tried out at that moment. And that gave rise to a whole lot of interesting, successful forms of life thereafter. So I think the Cambrian explosion we're seeing in InsureTech started about 3 or 4 years ago, not 500 million years ago per se, but really we just sort of see this explosion of interesting new ideas and new types of companies and business models and products and data all emerging seemingly out of the primordial soup of insurance. And that's really interesting because we don't. It's really hard, even I think, even if you're a VC, to predict which one or which body type of startup is going to succeed. But it's a little easier to be able to make the claim that some of them are going to succeed, and that's what it feels like. I may not know whether it's going to be mammals or Tyrannosaurus Rex that emerges out of the Cambrian explosion, but it sure feels like something on a couple legs, is probably going to have a pretty good outcome.
Right. And we've seen, I mean, just as we're recording this, Lemonade recently announced a bid for IPO with an estimated $2 billion valuation. So I don't necessarily want to get into the specifics of that, but this, different routes for these insurtechs. So IPOs, M&A, you'd mentioned a lot of them are shifting towards starting their own MGAs and taking on more of the risk themselves. Like, where do you see, what are these possible routes where all of these currently little or medium-sized companies could go? What are the options?
Yeah. And I'll start by saying, and most of them will die out. Right?
Okay.
Which is an important backdrop, right? And part of it's the venture capital math that's in my head, right? Success for this Cambrian explosion does not mean 9 out of 10 of these startups have to succeed. It means 2 or 3 out of 10 need to do pretty well, at least make their investors some money. Maybe 1 in 10 do really, really well, right? Give their investors, a 10x or a 30x outcome. And that means, by the way, that more money will then come into the sector and be recycled, and it'll continue to have this proliferation of new companies, new startups coming out of it. But that still suggests, somewhere a third will fail and a third will kind of capitulate, right? And just sort of become bolted on to some other company that has a working business model, and that's fine, right? I think that of the ones that are going to be eventual winners, look, there's 2 types. There's a fundamental split. There's the B2B companies, right? The ones that are trying to sell into insurance incumbents, right? They're enterprise-facing startups. They are trying to help the incumbents become better, faster, more efficient, more customer-friendly, whatever. And then there's the customer-facing startups, right? Think of Lemonade as a well-described customer-facing startup. They're not trying to sell into Allianz. If anything, it's the other way around, right? The customer-facing ones like a Lemonade or Metromile, they're trying to get the insurance incumbents into their supply chain, whereas the B2B ones are trying to become part of the supply chain of the current insurance giants. Both are legitimate ways to go to market, of course. Right? They have different pros and cons. In terms of exits, IPOs are wonderful. They are, first and foremost, they are a financing event. They're not the destination. And that's why great entrepreneurs don't get wrapped up around, hey, my goal is to IPO. Right? If your goal is to IPO, that makes for a much less interesting company. If your goal is to build a great company, and that may end up becoming part of some other company, or it may end up being standalone, may stay private for many years. Like, those are all fine. I think the key is how are these companies building fundamentally good economics for themselves and for their stakeholders, right? And I say that second part is equally important. A great company, a sustainable company here is not going to just build great profitability for itself. It'll be building a great value proposition for its customers, right, whether enterprises or end consumers, and it will be really great for its own supply chain. Right? If you are a customer-facing new insurtech startup and you're working with a reinsurer, part of your job in building a sustainable business is making sure that reinsurer is getting good returns too,
Mm-hmm.
as well as making sure that those customers are getting a great insurance product. So I'm sort of looking at. I hope I'm answering enough of your question there.
Yes, of course. Definitely. And I mean, it's curious because when at the keynote in 2017, at least, you sort of pegged on at the end of your comment on Cambrian Explosion, and you said with few exits so far. So what I'm hearing is that you do expect quite a lot of exits to come, a third of the industry.
I do. I certainly expect. I've become very optimistic actually in the last 12 months. If you had asked me 12 months and a day ago, I would have said, I think that this insurtech thing is going to prove to be valuable, but there's a real scenario in my mind that I worry about where it doesn't. At this point, the things I've seen, I feel like, yes, there's clearly some valuable companies being created in both the B2B and the customer facing side of things. Maybe not always the buzziest companies, but I do think that there are quite a few companies that are building real sustainable economics and are doing so, are pursuing strategies that will over time deliver scale and are thus, creating real economic value either as a standalone in the long term or as something that is valuable in the hands of someone else. It's actually, we're now, call it 3 years since the Cambrian explosion began, and the first wave of modern insurtech started getting early stage funding. Now is just about the time where you'd expect them to start demonstrating the really interesting economics, right? Because first you got to get the funds, then you got to start building out the product, then you got to build out partnerships, and in insurance, even with the relatively good willingness of the insurance value chain, the insurance incumbents to actually experiment and engage with the startups, lighting up a new product actually does take quite a long time in insurance, right? For many good reasons, right? It's complex. There's regulatory hurdles. There's real risk that you need to manage here. But now is about the time where the first wave of startups really should be about at the point of getting to prove that what they've been building actually works. And so the next 12 to 24 months, I will say, if that first wave of insurtechs doesn't start to have some sort of clear winners when it comes to fundamentals, then there's a real problem. But I'm actually quite optimistic from the bits and pieces I've seen and triangulated into that there's at least a good fraction that are building something real and interesting.
Cool. Well, it'll be an interesting 12 to 24 months to see how that plays out.
You're listening to Season 2 of the Accenture Insurance Influencers podcast with host Igrana Yu. To learn more, visit accenture.com/insuраnceinfluencers, where you can find the complete Season 1 and subscribe to get all new episodes. Now, back to the podcast.
Another one of your harebrained schemes that seems to have taken off is InsureTech Connect, which kicks off September 2019. Forgive me, I don't have the dates in front of me, but
September 23rd through 25th.
There you go. In Vegas?
Yes, at the MGM.
Okay, perfect. And last I checked, last year had more than 5,000 attendees. Is that right?
That's right.
Yeah.
In our first year, we had 1,500. It went to 3,500. Last year was 5,500. Our best guess is we'll be somewhere around 7,500 this year.
Wow. I mean, that's pretty impressive for a harebrained scheme. What do you attribute to this tremendous pickup and support of ITC?
Yeah, I like to say that in the course of a person's career, they'll probably have like 3 or 4 really good ideas. And this was certainly one of my, 3 or 4 best that I think I'll ever have. Look, this really was a case of building something for a focus group of one. And as funny as that sounds, like that actually is, I think, a key of why it's succeeded. I needed to go to this thing. So I found a fellow who's now become a great business partner with me, Jay Weintraub, to help bring this notion to life. And we built it to be the kind of conference that I would want to go to with my venture capital hat on, meeting other investors, meeting the entrepreneurs, meeting the innovation executives across the industry. And so I think that helped with the execution of it quite a lot, right? Making sure that it really was very business focused, very outcome focused, a place where business actually can get done. Certainly, I think we benefited from our timing as well. We couldn't really find anything else out there quite like it, and it certainly coincides with the Cambrian Explosion. And then I think we have it sort of as a big tent event. It's really meant to be very inclusive of all categories of insurance, all parts of the value chain for insurance as well. And I think we actually did a pretty nice job, if I can pat myself on the back, around also making it expansive on the diversity and inclusion, right? Bringing in the new talent. We had some scholarships, so to speak, for some students, right, to come attend. Right? We really made sure that this isn't your grandfather's Oldsmobile, right? This isn't necessarily a traditional looking conference in terms of who's there, but that it is senior in terms of the participants, and people come. Maybe what's most remarkable, people come to it with a mindset of exploration and innovation. And I think context matters, because I think you could have many of the same people attending a different event without the same context, and they wouldn't be as keen to take new introductions and meet people that they haven't met before. But I think that we managed to set the context for the event so that people are coming in and really quite keen to bump into folks that they may not already know, and be open to new ideas as the foundation at the conference for future business deals, future partnerships coming out of it.
Mm-hmm, mm-hmm. As it gets bigger, do you feel like it kind of takes on a life of its own where those things will naturally happen, or does ITC need to kind of guide those? Are you a little bit more of a matchmaker as it gets bigger?
So, as it gets bigger, it's hard. It's actually harder for us to hand matchmake. Oh, Susie. Oh, Bobby, you two should actually talk. You've got something in common. We actually try to do that where we can, but the bigger it is, the sort of hand-picked connections just don't scale as well. Mm-hmm. We have tools that we provide, right? An app to let people matchmake, and we're actually quite thoughtful about the frameworks we use there. There's actually a lot of, I'll call it, social engineering going on as well, in not just the content that's on stage, but in the whole design of the agenda. There's a lot of value. There's a lot of value in serendipity. It's one of my favorite words. Right? And if we can engineer the conditions for serendipity, where two people who weren't even looking for each other manage to sit down at the right lunch table and say, "Oh, what do you do? Oh, what do you do? Oh, well, that's interesting. Oh, hey, we should talk about that, after the event." If we can engineer those conditions for serendipity, then, and the context of where people want to learn about what's happening and what the possibilities are, that actually gets our job done 90% for us.
Mm-hmm. What can people expect from ITC if they haven't attended? Do you have a general format? Is this suits and ties, or are we talking jeans and hoodies?
Whatever makes you comfortable. It is a big tent event. Now, look, suits and ties, that's the tie part at least is pretty rare You see a few of them. That's okay. And you see the genes. I like to go. I like to talk about probably the most common is what I would call venture casual, right? The jeans with a sports coat, for men at least. I think that it's meant to be exhausting, and I think we succeed at that actually. Like if you show up on Monday, maybe you show up on the Monday and go to a couple of the pre-conference events. Then we've got the kickoff, and then there's usually some dinners and things like that. And then the main program starts the next morning and goes till 4 or 5 o'clock. And then there's dinners and drinks and dinners and meeting with people and more of the same the next day. Like it's actually meant to be not frenetic, but definitely active and exhausting
Mm-hmm.
because everyone's coming there all at once. And you really do want to, if you're going to make the most out of it, you want to jam the time in to meet with as many people as you can and see the interesting content that you can and enjoy the benefits of serendipity. So you really do want to go in with a mindset of, okay, I'm not going to be necessarily hitting the slots at all. I'm not going to be drinking too much. This is going to be work, work, work. But I'm going to get more done in 2.5 days than I'd be able to get done otherwise in 2.5 weeks.
Mm-hmm.
That's my hope anyway.
Right.
And then it's also my son is looking at colleges right now, and he's a junior, rising senior in school. And as we've gone to the big universities, right, all of them say the same line. You can make a big school small, but you can't make a small school big. And there's a piece of that for InsureTech Connect, right? Our job in many ways is to help everyone have the right event for them, right? And that doesn't mean it's going to be the same event. They may have no overlap with someone else at the event in terms of what panels they see or what networking events they attend. And that's fine because as long as we can make it relevant for everyone there, then that's terrific.
Mm-hmm. I think one of the key points of InsureTech Connect is that you do attract a really global audience. Why is that important?
So it starts with insurance is a global industry, and the insurtech movement is happening globally. Uh, and so it would be a narrower conversation, right, to make it just about the US. There's a lot of value, of course, in regional conferences. And there's some very good regional conferences around insurance and insurtech around the world. But there's also great value in having at least one conference that does have that global scope of conversation. And so there's learnings that you can get from understanding what's going on in different markets and talking to your counterparts in different markets and the aspirations of the startups and the ambitions of many of the incumbents, right, don't know geographic bounds. Um, I think some of the Chinese tech titans, for instance, that have some real interesting plays in insurance, they're starting to look at expanding into markets like Brazil. And one of the things I love is that we'll have about my guess is 100 people from Brazil this year attending. Right? So it's a good reason for people from China, if they're interested in what's going on in Brazil, right, to attend our event and learn from it.
Mm-hmm.
I just think it's a much more robust set of conversations people can have.
You typically highlight some big insurance trends as part of your part of your keynotes. I've noticed you've gotten away from the predictions a little bit, but I'm curious. Do you have any teasers of what to expect for the 2019 keynote?
Well, I foreshadowed a little bit this thinking about technology mainly driving change by driving the cost curves down and how that in some cases can be so great that it's transformative or opens up the door for transformative business models. I like that idea a lot. I won't be able to help myself but to keep talking about the APIification of the InsureTech stack. I'm getting progressively more excited about genomics and the implications there, and then probably the sort of tactical piece that I'm seeing as a trend. What I maybe feel most confident about is this notion of the embedded insurance, right? The shift from, I'm trying to figure out the best not funny joke to make about it. And it's like the shift from B2B to C to B2B to C, right? Except the difference is like the middle B is broker, right? In the traditional insurance model, right? And the shift to B2B to C, where the middle B is just a business, right? That serves as a channel partner, right? Maybe it's, an OEM for like a Porsche or someone like that, or a Tesla. Maybe it's a home builder like Lennar, right? Maybe it's a genetics provider like 23andMe, right? Like there's a lot. Maybe it's Expedia. Oh yeah, they've been doing that for a long time. But like the notion of channel partnerships as being more and more commonplace, both in the traditional categories of insurance, but also as a sort of initial entry point for new categories or new products, new types of insurance. I'm getting involved in one company that's developing an insurance product, sort of a life and especially accidental disability insurance product for people participating in high risk sports, organized sports, like some sort of canoeing trip or a triathlon, let's say. And it's an interesting new product, not a classic insurance product, a little bit more on-demand-ish. But the go-to-market strategy of embedding it into those event organizers makes a heck of a lot of sense. And I could easily imagine this company struggling to figure out how to go market it direct to consumer. And it's just not a natural fit with your classic corner store brick and mortar broker. But embedding it with the right channel partners makes all the sense in the world. Mm-hmm. So I think one of the themes is this B2B to C, right, where the middle B is a channel partner, not a classic broker. Maybe one of the themes.
Well, we'll look forward to seeing the keynote after it launches. Today, we've been speaking with Caribou Honig, the chairman and co-founder of InsureTech Connect. Thank you very much for taking the time to speak to me, Caribou.
It's been an absolute pleasure.
That was my conversation with Caribou Honig, co-founder and chairman of InsureTech Connect and HR Transform. In our next episode, I'll be speaking with Ruth Fox-Blader. Ruth is a managing director at Anthemis, a venture investment firm. We'll be talking about keys to success for managing change and why Anthemis invests in financial services products designed for the digital world. I'm Igrani Yu, and this has been the Accenture Insurance Influencers podcast. Talk to you in 2 weeks.